Hello, I'm Larry Lee with Brownfield Ag News. Katie Wantoch joins us from the Dunn Co University of Wisconsin Extension. End of the year, tax time. Are there some big surprises farmers need to think about as they prepare for 2020 taxes?
Yes, definitely. Hi, Larry. 2020 was an okay year for farm commodity prices, but what really is making this year different is those government program payments. And farmers, if they took advantage of those, they're going to be kind of surprised when they go and meet with their tax preparer here in the next couple months.
What kind of problems might these farm programs, these extra payments cause? Because it'll all be considered income.
Right, correct. And that's, I think, what's going to be kind of unexpected. So, farmers, if they were participating, if they're crop farmers, they may have received some ARC PLC program payments, in October or December, or even November. The CFAP, the Coronavirus Food Assistance Program, there was round one and round two that came out. And those payments, if farmers received those, market facilitation program payments for those dairy farmers. And then some farmers took advantage of the Wisconsin Farm Support Program received in July and August. All of those will be government program payments reported on their Schedule F if they file Schedule F, lines 4A and 4B, and those will be taxable income. So they will be subject to self employment tax for those farmers that will be taxed in that way. And yeah, so definitely some of those program payments were quite substantial depending on the farms. For example, dairy farms really struggled, and those programs really helped people through 2020. But they just have to keep in mind that those are taxable income, and will need to consider those as they're preparing their taxes for 2020.
Are there any huge differences in how the IRS and the State Department of Revenue will treat each program, or are they all just considered farm income?
Yes, when they come issued, they'll come issued on a 1099 form to that farmer. And so, crop insurance payments that you might have received may be eligible for deferral, for example, as compared to these government program payments. Typically in the past, if you've had some injury to your crop, you maybe have been able to defer those payments into the next crop year. But these government program payments were as a result of income loss, some market loss, or something like that, which that means that you have to take it in the year that it was received and will need to be reported on in 2020's tax return.
Something else a lot of farmers will have to think about is the unexpected rise in commodity prices near the end of the year. That'll bring some more income in as well, and they might be scrambling looking for some expenses to counter that.
Yeah, definitely. I mean, it's a good problem to have, right? That we have enough income. And so there's some things that farmers can consider that maybe they haven't in the past. Prepaying for those farm inputs, seed, gas, diesel. Just keep in mind that you really should not exceed 50% of those farm expenses in most situations. And you really should have some type of documentation instead of just prepaying. You really need to have a stated quantity, price, and what that actual expense is. So, there's different things tax preparers can do, and they can look back a couple years called income averaging. Farmers might want to consider, gets a little complicated, but something that I don't think farmers have done in recent years because they've been short on income is retirement account contributions. Those can be done up until almost April and going back here into 2020. So that's something certainly that farmers should consider, as well as, if they want to look to make timely purchases of some assets or sale of assets, you can really manage depreciation. There are some good opportunities for that as a result of the Tax Cuts and Jobs Act that farmers can take advantage of as they look to, plan here before the end of the year for their taxes.
What about contributions to, say, health savings accounts or medical plans?
Yeah, that's certainly something to consider as well. Those can be potentially deductions for your employees or for yourself. Again, consult with your tax preparer to see if that's advisable and appropriate in your situation.
It sounds like it might be different depending on the farm.
Right, correct. And if you have done that in the past, then IRS might be okay with that. But yeah, definitely all things to run by a tax preparer.
Anything new this year that farmers may not be ready for, they may not have seen yet?
Well, the PPP loan, the triple P loan, the Paycheck Protection Program, and also the Economic Injury Disaster Loan, those EIDL loans. There's some things that are going through Congress still as we sit today on December 11th that may change. So I don't want to talk about them too much, but that's something for them to keep in mind because that involves paying for some of those allowable expenses. Each program was different. The EIDL did provide some advances, and those actually will need to be reported similar to those other government program payments, those advances. So those are two things that were unique to 2020 that probably won't be anticipated going forward. So if farmers received either of those programs, definitely want to seek some advice for those.
Some farmers in the late third, early fourth quarter saw some better numbers in their finances, made some equipment purchases, and now I understand some are starting to back off of that because of the change in tide. I would imagine be careful when it comes to tax time and depreciation with those things.
Yeah. With deferred contracts, especially if you're looking at here the end of the year, you want to be, set with those and you need to have a contract in place. And that contract can say whether, if you purchase that equipment, whether you take receipt of that equipment in 2020 or 2021. And that allows you, the farmer, to be really flexible with when you're able, if you need that depreciation in which tax year. So definitely an opportunity. There's some nuances with that you should really consult with your tax preparer on. But there are some bonus depreciations, 160, 179 depreciation to keep in mind that may benefit or may not. And so it's really working with your tax preparer on what you see is best. Not always bad to show income because, like I said, a lot of these tax deductions, you need some income in order to deduct some of them too. So, um, yeah, it's a lot of nuances and time to work through those as you're planning for your end of year considerations.
I did talk to a farmer not too long ago who has a very good friend who is a tax preparer. And you had to have that tough conversation with him because the friend is nearing retirement, hasn't really kept up on the latest changes in the tax laws. And he says, I love having you around, but I got to get somebody that's been keeping up to date on this stuff. It's really important to have a tax preparer that is really in the game and knows what's changing, isn't it?
Right, it is. And in fact, my husband and I are kind of working through that right now. We're stepping up the scale of our business. And, the woman we are working with, she was great. But farming there's so many nuances and technicalities, credits in the state of Wisconsin for gas that you use on the farm. And so just making sure that your tax preparer does keep up. There's a lot of information out there, a lot of credits that they need to take in order to maintain their credentials. And so, yeah, working specifically with someone who does prepare farm taxes is really crucial, And yeah, as you're going forward, like I said, what year you take those deductions and where you don't, and especially with farmers that are looking to retire, that's not something you should really think of a year or two out. You almost need 5 years out to really start that planning process to take advantage and not give your money away to Uncle Sam. That's certainly something that I know farmers are definitely want to keep in mind.
Anything you'd like to add today?
No, just go and meet with your tax preparer before the end of the year. You got a few weeks left.
If anyone has any questions for you, how do they reach you, Katie?
Sure. Best is to reach me by email, Katie, Katie .wantoch, WANTOCH @wisc.edu.
Katie Wantoch is with the Dunn County UW Extension office. Thanks for joining us today on Brownfield.
Thank you.